The present Bitcoin price structure is indicative of a market entering a period of extreme compression, often preceding a significant volatility expansion, a phenomenon frequently observed following extended periods of low price discovery between key support and resistance levels. A deep dive into the higher timeframes, specifically the weekly chart, reveals that Bitcoin is currently trading within the upper boundary of a multi-month-long ascending triangle pattern, a distinctly bullish continuation pattern suggesting that the long-term trend remains fundamentally upward. The crucial overhead resistance defining the flat top of this triangle is situated near the 94,500 USDT psychological and technical barrier, which represents the area where sellers have successfully capped price rallies on multiple occasions over the past quarter. Conversely, the ascending trend line support is now dynamically positioned around the 90,000 USDT level, meaning that with every passing week, the floor for Bitcoin's price rises, effectively squeezing the price action tighter and building pressure for an eventual breakout. The check-in money flow, or CMF indicator, a volume-based oscillator used to measure the buying and selling pressure, is currently exhibiting a positive reading, meaning that capital is predominantly flowing into the Bitcoin asset, reinforcing the idea of underlying accumulation. Despite the narrow price range, this positive capital flow suggests that institutional and smart money participants are positioning themselves for a future upward move. Furthermore, the analysis of the derivatives market indicates a flattening of the futures basis, meaning the difference between the futures contract price and the spot price is negligible. This lack of a strong premium or discount suggests that the market is not overly leveraged in one direction, a healthier sign that minimizes the risk of a sudden massive liquidation event. However, the short-term picture on the hourly chart shows the slight bearish bias, with the price trading beneath the 50-hour exponential moving average, or EMA, a common indicator used by day traders which signals a temporary dominance by sellers in the intraday time frame. The immediate support on the short time frame is the 91,200 USDT level, which must hold firm to prevent a quick drop back to the main ascending triangle support. The most recent on-chain data shows a significant increase in the total number of Bitcoin wallets holding non-zero balances, hitting a new all-time high. This metric is a powerful gauge of adoption and network growth, indicating a continuous expansion of the user base, which provides a strong fundamental backdrop for long-term price appreciation regardless of short-term volatility. Additionally, the movement of stablecoins, particularly USDT, to centralized exchanges has seen a recent uptick. This often signals that funds are being moved in preparation to purchase volatile assets, potentially providing the fuel needed for the anticipated breakout above 94,500 USDT. The path of least resistance is generally considered to be the direction of the dominant pattern, which in this case is bullish. However, we must acknowledge the high probability of a false breakdown or wick below the ascending trend line support to flush out late long positions before the definitive move upward. My ultimate conviction remains with the long-term structural pattern suggesting a break above 94,500 USDT is the most probable outcome, with an initial target derived from the ascending triangle height projecting a move toward the 100,000 USDT psychological milestone. A decisive weekly close below 90,000 USDT, however, would entirely negate this bullish pattern and signal a much deeper correction. The current Bitcoin market structure presents a fascinating dichotomy where long-term bullish fundamentals clash with short-term technical resistance, creating a highly volatile yet confined trading environment that requires precision in both entry and exit strategies. Analyzing the weekly chart, we observe a pronounced period of decreased volatility as evidenced by the Bollinger Bands narrowing significantly, a condition often referred to as a volatility squeeze, which historically precedes a major price movement in either direction once the energy stored in this compression is released. The upper band of the Bollinger Bands is currently acting as a strong dynamic resistance near the 94,000 USDT level, while the midline, the 20-week simple moving average, provides solid support just above 90,500 USDT, making this $3,500 range the immediate battleground for the next directional move. A key fundamental indicator known as the stock-to-flow model, a popular long-term valuation metric, continues to suggest that Bitcoin remains undervalued at current price levels, reinforcing the belief among long-term holders that the asset is destined for significantly higher prices in the medium to long term. However, this fundamental strength is being temporarily overshadowed by short-term market dynamics, specifically the sustained selling pressure from miners who have recently increased the transfer of their newly mined Bitcoin to exchanges, possibly to cover operational costs or upgrade their hardware prior to the next difficulty adjustment. This miner outflow contributes to the overhead supply pressure. Analysis of the short-term on-chain metrics shows an interesting development, with the exchange net position change metric recording a series of large negative spikes over the last 48 hours. This means that a significant amount of Bitcoin is being withdrawn from centralized exchange wallets and moved into cold storage wallets. Historically, this large-scale outflow from exchanges is a strong bullish signal, as it receives the immediate liquid supply available for selling and suggests that large entities or whales are securing their assets for long-term holding, further drying up the supply side of the equation. This withdrawal of coins reinforces the bullish bias of the descending triangle pattern. The USDT supply on exchanges remains high, which suggests ample dry powder on the sidelines ready to be deployed to purchase Bitcoin, which could provide the necessary fuel for the breakout above the 93,000 USDT resistance. However, we must remain cognizant of the risk posed by the realized profitless metric, which has recently shown a minor uptick in realized losses, indicating that some short-term buyers who entered near the top of the range are capitulating and selling their coins at a loss. This short-term selling acts as minor pressure, but is healthy for the market as it clears out with leverage. My immediate prediction is that Bitcoin will continue to trade tightly within the 91,500 USDT to 93,000 USDT range for the next 12 to 24 hours before a decisive